Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. Happy Friday. We hope that you all had a phenomenal week of trading. The S&P futures down 13 to start the day, selling off a little bit here. We'll get into why later on in the show. It's been a pretty choppy week of trading. Hasn't been the easiest. There's definitely been some opportunity. We've got a special guest with us today to talk about his trading, to talk about how he's trading today. And it's going to be interesting to have somebody new on Bet the Bell, just to get some new opinions. And we'll see how Rocky does when the green and red question comes around. Now, I just gave it away. Rocky B Trades. We'll bring him in first. Welcome to the show, brother.
Hey, what's going on, guys? Thanks for having me on this morning. Excited to be on. Beat the Bell. I've been watching a few of these, and honored to be up here with you guys.
It's a pleasure and an honor to have you, brother. All right, Money Mander. Good morning.
Morning. Stoked to have Rocky. I know everyone's getting sick of my opinions, so we'll get some fresh air on here. PCE just came in hot, so we got some stuff to cover here on Fed Forecast.
Diamond Trades.
What's up, guys? Sorry, I couldn't put my audio. Good morning. Happy Friday. Rocky, what's going on, brother? Let's get after it. Mander mentioned it. We got some news to cover. Should be an interesting episode.
And Ramsay Rippers.
What's up, my man? Yeah, as Mander said, data came in a little hot. Market selling off here. Excited to get to a good episode.
And last but not least, Moe Mamba.
I was about to skip me, man. What's up with that? Good morning. Rocky B, welcome, my brother. Welcome. Let's have us an episode today.
Let's do it, man. Let's get it. Thanks for having me on.
All right, let's kick it off with Fed Forecast, Economic Calendar. Diamond, Mander, what do we got?
Yeah, let's do it. First thing we'll talk about, obviously, is that PCE number that just came in 8 minutes ago. So headline PCE came in year over year at 5.4% versus 5% expectations. So definitely came in on the hot side. Month over month 0.6 versus 0.5 expected. Core came in at 4.7 versus 4.3 expected. Core month over month 0.6 versus 0.4. Consumer spending 1.8 versus 1.4. So literally every metric came in hot this morning. Markets are literally in creator mode right now, down 24 points since that news came out. So definitely will be interesting to see how the markets want to react throughout the day. We've had a really interesting week where it's been extremely volatile. We'll get into that in a little bit. Let's hit the economic calendar for the rest of the day, see what else we have on tap. PCE out of the way, 10 o'clock. We have new home sales. We also have Michigan consumer sentiment at 10 o'clock. And then to end up our macro for the day, we have Mander and Jefferson both speaking at 10:15. Two Fed speakers at 10:15, and then that should pretty much do it for the week in terms of economic data and economic releases. Let's turn back to markets. We've had a pretty choppy week following the FOMC minutes release that we had on Wednesday. As you can see, it's been really volatile, right? It's just been up, it's been down. Markets yesterday had a really wild day, sold off pretty much 60 points from the highs before all three indices reversed intraday, ultimately closing green. That intraday price action, for those of us that were watching it was really one of the wildest intraday days I think that we've had all year to date. So we'll see what the market gives us today. It looks like we're going to have another wild one. Again, already down 25 points here in pre-market. Let's hit the Fed minutes that came out on Wednesday. So the Fed minutes release came out on Wednesday. It showed that most of the officials were backing that quarter point rate hike that we got at the February meeting earlier in the month. Additionally, for the Fed minutes release, it really just reiterated the Fed stance all along, right? That they don't really know how long this battle against inflation is going to take, but they do know that it's not going to end soon, right? That's the one thing that they understand. The markets are continuing to price this in as interest rate probabilities for the March and May meetings have both risen steadily since the start of the month, right? The market is really starting to price in the fact that, okay, maybe they are going to keep rates higher for longer. And we're seeing some of those moves under the surface. We're seeing those moves in the dollar index, and we're seeing those moves in the bond market moving accordingly. And then stocks, obviously, given some sort of a risk-off sentiment, with all those moves going on elsewhere in the world. Florian Aleppo from Lombard Odier Investment Management really hit the nail on the head when summarizing the Fed minutes release. He basically said we just need to come back to our senses. Currently, we don't know how many rate hikes we're going to need, but we know we don't need 10 more hikes. It's going to be 2 or 3 or 4, and that in and of itself is not what's bearish. The bearish message will be if we get clear signs that the U.S. economy is going south. We're in a wait-and-see situation as investors search for either clarity on a soft landing or a rate hikes themselves are going to market. It's more so what the rate hikes are going to do to the economy. And I think that's really what we're in that wait and see mode to determine exactly what sort of impact that's going to have on the rest of the broader economy and some of these companies that we see trading at ridiculous valuations.
Yeah, I think Florian, whatever his name was, I think he said it best in that the terminal rate pricing was way off to start the year, but as you mentioned, it has repriced, especially in the bond market, not quite the stock market, but moving forward, whether it's 1, 2, 3, 4 rate hikes, whether it's 50, 75, 100 more basis points, all of that is within a relative certainty, a relative margin of certainty. Really, I think what remains uncertain moving forward for downside risk would be, one, how long they have to keep them there, right? It's really not about how high they set them. It's about how long they're going to keep them there, how long this labor force remains historically tight and strong. And even showing yesterday with jobless claims, they still came in less than expectations yesterday. And now PCE extremely high, which I'll touch on in a second. And then 3, right? It's going to be how sticky this elevated inflation then goes on for based on the strength of that labor market. So I think if the latter case becomes the problem with inflation remaining sticky as it's looking with PCE, that's really where rates have to become elevated for longer. And that is where this recession fear almost becomes a certainty. So that is what is uncertain right now. And I did want to mention the Fed funds futures still have priced in a pivot in December, a 25 basis point decrease, which the Fed hasn't said they're going to do. But besides that, pretty much everything else the Fed has forewarned and projected is what's being priced in. Now, PCE, I want to touch on really quickly. I think it's obviously the month over month came in very hot. Everything came in very hot. But what surprised me was the year over year coming in higher than last month, when in comparison, February of last year was really when this inflation problem started to uptick. So February of last year was higher than January significantly. And now this February year over year was higher than last month. And so really, even beyond the month over month increase, it was that much elevated that it came in positive year over year, which I think really is going to start flaring the sirens here that inflation might remain sticky. Even if we go back, it seems forgotten already, but payrolls came in triple expectations. We added 500,000 jobs. So that's really what I'm watching there. Let's cover NVIDIA really quickly. NVIDIA earnings, obviously the big one. Double beat here yesterday, top and bottom. Revenues beat 6.05 billion to 6.2 billion, 6.02 billion. Expectations down 21% year over year, but beat expectations. And then adjusted EPS came in 8 cents above expectations, while down 33% year over year. That puts fiscal year 22 or 23, last year's EPS, at $3.34 adjusted, which is down from $4.44 of the year prior. So although down, this is where NVIDIA really rallied. They projected that next year will return to $4.39 due to this massive growth in AI. So Ryan, if we could pull this chart up, the not so sexy numbers were the gaming chip revenues falling 46% year over year, and then professional visualization sales falling 65% year over year. But automotive and embedded sales surged 135%. And really, obviously, the whole race is on for AI. So where they really rallied was the forward guidance on AI. They came out and said, while data center revenues fell quarter over quarter, which is what the GPU sales are categorized into for AI, they remained up 11% year over year. And the CEO really fed the bullish here, stating he sees the newly exploding generative AI market to add 20 billion in market cap a year by 2027. And then NVIDIA should be able to maintain 65% of that market cap because currently they have the only chips viable to create the massive AI language system. So for ChatGPT, for Google, for all these things that are looking to move towards that generative AI, right now NVIDIA has the only chip that's able to do that. And UBS estimated that it takes 10,000 NVIDIA chips to continually train the Chat GPT bot alone. So while revenues for cloud services were down, chips for consumer tech falling, obviously we saw that across the whole board of semiconductors right now. Gaming, personal expenditure, all of those things are down. The AI boom is roaring right now, and NVIDIA really seems to be at the forefront to capture that benefit over the next coming years, which I think is what really, really rallied the stock. Obviously, we said this before, forward guidance and that AI thing was going to be the biggest thing to drive this name out of earnings. Now, is what they're saying about AI enough to justify the 135 trailing 12-month PE? I don't know, but only time will tell, and NVIDIA definitely seems at the forefront of this AI race right now.
Yeah, before I pass it back, I just wanted to mention that NVIDIA said AI 75 different times in their earnings call. I think that was a house record for earnings this year. That was a house record, 75 times. And then secondly, just to bolster your point about how the infrastructure around AI is going to really wind up being important, they were talking about how ChatGPT searches cost the cost per search is 10x that of Google's Google search. So you have to imagine there's going to be a lot of build out and infrastructure that goes along with this AI, where companies can definitely stand to benefit. So definitely important. That'll wrap it up for us here at Fed Forecast. We'll pass it back to Alejandro.
Awesome stuff, fellas. Thank you very much. Now I want to bring in Rocky to have a quick conversation here. Rocky is, of course, a good friend of mine. I've had him. Noah and I have had him on the podcast, Trading Camp Pod, a couple times now. Very respected guy in the fintwit community. And Rocky, I just kind of want to give you the floor here to talk a little bit about your trading. I know you have a Discord. Feel free to talk about that. But how have things been as of late, man?
Been pretty good. Thanks again for having me on. Definitely good friends with a lot of you guys. You guys are awesome. But been pretty good. You know, obviously this is one of the toughest markets I've ever been in. I'm sure every trader can attest to that. But things are good, for me, news trading is slower. So they're really trying to lock in more on the technicals, the swing a little bit more and things like that. But yeah, we do have a Discord. I run it with John Bates, Win the Day. And yeah, I mean, we're just live trading and educating people and just having a good time trying to be the best we can be.
Awesome, man. Also saw that you were recently featured in the Wall Street Journal. How about you tell us about that?
Yeah, just one of the most humbling experiences. It kind of came out of the blue. The lady who was talking to me, she actually works on CNBC as well in the Wall Street Journal, and she just contacted me. You know, we talked about Bed Bath & Beyond because she wanted to do a piece on that. Then I told her, funny enough, I actually took a news trade on Bed Bath on January 26th when they released their 10Q about warning for bankruptcy, and the stock went from 3 to 240. I think I got like 150% or 200% on the puts and the IV juice and all those things. But sure enough, it turned out she wanted to do kind of a piece on me, just talking about, how I trade options, how I size my account down a little bit, and just talking about my journey as a trader. It's definitely humbling, and I'm thankful that I had the opportunity to do that.
Awesome stuff, brother. Well, we appreciate you jumping on. Seriously means a lot. We're going to continue with the show now and head over to Ramsay Rippers, who's got Bet the Bell with us for us. Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys.
I get two shots there at the transition. If I mess it up, Alejandro comes in a second time. So no worries.
Yeah,
all right.
It looks perfect. It looks great. And now we have an even greater thing on the screen right now for everyone. Let's get right into it. Ryan, pull up the stats. Everyone having a really good week. The numbers are starting to increase. People are winning. Diamond still in the lead. Mander close second. Hondo 3 games over. Snipes and Moe in the last 2 spots. Pretty much a toss-up on Wednesday. Everyone won it. You got another toss-up today. Didn't really expect the market to sell off, the indices to sell off about 3 points off of that data that dropped at 8:30 as stated on Fed Forecast. Let's get right into it. Green or red today? Rocky, let's start with you.
Well, we already got a little bit of a head start. So, and previously these past couple Fridays, we've had these crazy end-of-day rippers. I think I'm going to still stick with red. The news, I mean, with the numbers coming in hot. All these tech names really starting to sell off. I think I'm going to stay with red.
Yeah, interesting you said that. Even yesterday, we sold off 6 points in the morning and early afternoon session, ended up ripping green, finishing green later in the day. Money Mander.
Yeah, crazy price action yesterday. It looked like bulls wanted to get some steam going, but irrelevant right now. PCE just flushed us. VIX, dollar, and yields were all up before that, so I'm going to stick with red.
Diamond.
I'm also going to go with red. I'm also going to go with red, but I could totally see us just ripping. I could totally see it. Just after the way this week is gone, I could totally see it.
And Alejandro.
I'm going with red.
Mamba.
I'd like to point out that I am tied for most wins. So the numbers are skewed. I just want to remind everybody that, I mean, look, I don't know how fair this is based on total attempts, but whatever.
You have 6 more losses than me.
Because I have 6 more appearances on the show. Or however many more appearances.
That's like something like a LeBron apologist would say about his finals appearances, to be honest. It sounds like a cop-out, but I'll let you have it.
I mean, at the end of the day, I'm here ready to go no matter what. Win or lose.
All right, brother.
Look, the diminishing law of returns. After some level of capacity is reached, the stats, level out.
What are you talking about? That literally has nothing to do with it.
No, I mean, it does. At a certain point, certain amount of games played, the stats equal out. I think that now.
Right, we're not there yet.
I feel like we are. I think we have enough games to play. Like, for example, I think that Noah's had.
We'll let you. No, Ramsay, you make all the rules, brother.
Well, here's the thing. Noah has, if we're going, according to like a professional sports standard, Noah has, you see the members even agree as well. Guys, on YouTube Live, put your thoughts in. I'm looking at it. Professional sports, you have 35 games played. Noah has 29 games played. I still believe that Noah leads the league in points because it's, the minimum number of games should be like around
professional sport.
Moe Mamba.
Hey.
Green or red today.
Good morning, huh? I'm gonna fade everyone, man. I'm gonna go green. It will be interesting though. This is the first time we are opening below the daily trend line, so let's see what happens today.
It's a great move, Mo. It's a great game theory. Everybody else went red. You go green. It's plausible.
You can gain.
What can I lose, bro? I'm last place. What can I
lose?
lose?
I love that move, Mo. I love
Mo
it.
calling for a false breakout, some short covering and a ripper. All right, second question. Ryan, please bring in the Tesla chart. So originally, before this morning's sell, I was going to ask if you guys thought Tesla closes today over or under $200. We were trading at a little, like just about $199.50. Obviously now a little bit of a dump in the pre-market, just tapped lows of $195.52. We have a really nice daily trend line setting up off of those January lows at around the $100 level. As you can see, bought back-to-back days off of that trend line. I want to know if you guys think it holds. I believe that this trend line is right around 195, 196. So basically where we're trading at right now. Do you think that Tesla holds this trend line by the end of today? Let's go to Rocky.
I'm going to go with no, just because, SPY's opening below that daily trend line. I think this is going to be a short the pop scenario. To have the SPY already be down 1.3% before the market's even open is a pretty big deal, I think. So I'm going to go below that 200 psych level and probably I think we're just going to climb down to the downside. Or this could be the whole move, but I do think Tesla trades below 200.
Gotcha. We'll do Mo and Hondo. Mo.
Could you pull that chart? Is that the daily?
Daily, yes.
Okay. I don't know why my shit looks different, but yeah, I do think we trade below 200. We are pre-market at 196, so I guess we got a head start on that. But no, I'm gonna say we closed above 200 on Tesla. We got a little, somewhat of a cup and handle on the daily. Let's see how that plays out.
Gotcha. So you think the trend line holds? Got it. Hondo.
Mm-hmm.
I think that it's going to break. I think that we're going to be trading under 200. Tesla in general has lost a lot of the momentum from the recent ripper rally where it doubled. I've actually been saying that I think Tesla's going to pull back a little bit because it's trading below the 50 SMA on the hourly chart for the first time since that rally started. So I guess this kind of lines up. I don't think it's going to hold.
Gotcha. All right, let's go into our last question. We got a little love, marry, kill, start, bench, cut scenario. Our names, Google, Microsoft, and NVIDIA. Rocky B, if you want to take it for us, which one you starting, which one you benching, which one you cutting?
I'm definitely going to start Google. I just think that they have so many different ways to make money. I personally watch a lot of YouTube. They're huge on ad revenue and things like that. I think they're trading at a discount compared to tickers like NVIDIA. Google's trading closer to 20 PE. I mean, NVIDIA's at 100 PE. When it comes to investing, especially, I want to find things that obviously are going to be around for a while, but also you think are getting at a good valuation. So I'm going to start Google. I'm going to bench Microsoft. They're kind of like in the middle. They also are obviously one of the bigger tech names, and they do a little bit of everything as well. But I think it's interesting. They still have that Activision deal looming around, so maybe that could boost their impact in the gaming space, and we'll see if that deal closes. I think it's supposed to close soon. And then I'm going to have to cut NVIDIA. I mean, just trading at 100 PE. Their earnings weren't even that impressive, and their gaming revenue dropped. So I think it's just because they're talking about AI and things like that. I guess I'll believe it when I see it, but in a market like this, I think fundamentals matter more than anything. Although it could just be one of those unicorn stocks where it's like NVIDIA or Tesla from 2020 to 2021, where it just rips the upside forever. But that would be where I'm leading.
Interesting. I like it. Mo.
All right, so I'm gonna play a little risky here. I'm gonna agree with Rocky on this one. Google I'll take as a starter, but I'm gonna bench NVIDIA and I will cut Microsoft. I want to play it a little risky, and wow, those chip sectors, man, can move. So Google goes down, NVIDIA's the backup. Hey, get you a Super Bowl. You never know. Nick Foles, baby, backup. Never know. You never know. So I'll take it. Google start, NVIDIA bench, and Microsoft cut.
Don't get Rocky started on the birds. Oh my God, we got 3 Birds fans on the show now.
Oh man, yeah, that broke my heart. I agree. I mean, that's not a bad thing, the Nick Foles comparison. Did win a championship, but yeah, I like that.
Let's get it.
Mander.
I'm right with Rocky on this one. He hit the nail on the head. So I'm going to start Google, bench Microsoft, and cut NVIDIA for really exactly what he said. Google right now has 10x the revenues as NVIDIA with only double the market cap. Like the difference of where these multiples are trading is crazy. I think Google is still going to be right at the forefront of the AI, but not trading at $100 PE. So I'm going to start Google, bench Microsoft right in the middle there, and I'm definitely cutting NVIDIA at these valuations.
And last but not least, Diamond.
Yeah, Mander stole the words out of my mouth. I'm pretty sure that we're about to talk about the same tweet, but I mean, Google last year, 282 billion in revs, NVIDIA 28 billion. Google last year-over-year revenue growth 1%. NVIDIA last year-over-year revenue growth minus 17%. And Google's still only worth 2x that of NVIDIA. Doesn't make sense. I think that if NVIDIA had a lower multiple, I would easily bench NVIDIA instead of cutting it. But just based off of where they're trading right now, particularly after that pop after earnings, I would cut NVIDIA, bench Microsoft, start Google.
It seems like most of the team's in agreement. All righty. That's going to do it for Bet the Bell. We'll pass it back to Alejandro here. Thank you, guys.
Beautiful. Now over to Moe Mamba for Mamba market analysis.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. Moe Mamba, huh? All right, SPY daily time frame here. So the big trend line everyone's watching, right? Interesting though, we are opening today below this daily trend line. We did test it 1, 2, and we held this candle right here. This was a bullish close for me, a really bullish close. I was pretty confident on this call into today. We were down before the data pulled us down even further. It will be interesting to see how we close. Why? Because I do say price action matters, right? News is temporary. I'm going to stick to that. And when you do have news, but your price action is telling you bearish, let's say we do gap up, you usually pull back. We've seen that multiple times throughout data. When it does come out, it's inverse of what price action is showing you, but you end up heading that direction during the day. So that's what I'm going to go with today. I do think we are going to come up just because of price action over here was telling me bullish. We did test this. We did bounce off of a demand zone, lined up this demand zone off of my 30-minute or my hourly yesterday. Forgot which one, but this is a nice demand zone we bounced off of, and we held key level here, 400.3. Big level I've been watching for the past few days, but we did come up and hold it. Looked like we were going to come up at least and test this 403 and see if we can come up to this 406. That's not the case. Now, to the downside, if we do continue to fall, this is what I'm watching. My big watch here would be this demand zone down here. Are we going to come through here and close? What I'll look for is a hook back into this, what was once demand, now supply next week, that is, and then come back down and test this demand zone. If we do hold, though, if we do come down and bounce off of here, I am going to have to respect that, and I'm going to continue looking for upside, potentially back into this trend line. Usually when we do get trend lines, you guys seen it on DT shorter time frames. You break that trend line, you sometimes come down into support, come back and test it, break, hook, and go, flip that trend line into resistance, and then continue downward momentum, right? So a few scenarios that can play out, but mainly today I'm going to watch this demand zone over here, see if we do hold it or we do break through. That demand zone is around 394.25 to 392.25, about a 2-point demand zone on SPY here. That's it. Just as demand zone will be on my watch. Thanks, Hondo.
Thanks, Mo. All right, we're going to start to wrap up the show now with today's top watches. For that, we've got Mander and Rocky. We'll start with Mander, and then we'll give Rocky the floor. Mander, what do you got today?
Awesome. I'm watching Meta here, so I actually really liked this. 1 second here. Technical difficulties. Awesome. So I liked this more to downside, but I had to show this both ways. If we had to break above the trend line resistance there, I like this long up to 180, but looking like we're going to sell down here. This has a hollow double gap liquidity shelf here all the way down to 161 with 2 earnings gaps. We gapped down on the last earnings back in September. I guess this was for Q2 22, and then gaps back above the same level on the recent earnings. So literally no liquidity here, no volume. I like this short down to 161.
Beautiful. Rocky, what do you got for us?
I'm going to take a look at Intel, ticker symbol INTC today. The reason why I like it is if you look at the daily chart, or do you want me to share the chart? I think I sent it. Here we go. So 25.32 is this yesterday low, and it was also that low it made towards the end of December. But as you can see, there's really no support below that level to that 52-week low at 24.60. You guys know I'm a big news trader, and they cut their dividend, I believe, yesterday or the day before by 65%. And they also missed by revenue in their last report by $3 billion. Obviously, it's terrible earnings. The stock got a pop, but now you're starting to see it sell off. People are buying the stock for a reason for that dividend. Now that they're cutting it, that's probably a terrible sign for investors. And I think below that spot, there really is no support leading to that low. And if that breaks, I mean, you're in price exploration phase. And, we can probably extract more downside since NVIDIA is also taking, their market share.
I like it, man. I like it a lot.
Good deal.
All right, guys. That's going to do it for this morning's show. Rocky, thanks again for joining us. This was a lot of fun. We'll definitely have to have you back on in the very near future. Hopefully,
sure.
you had as much fun as I did.
Dude, I had a blast. You guys are awesome. Thanks for having me on. Kick it with you guys this morning. Definitely run it back. Just let me know. Hope you guys have a great trading day, and thanks to listeners for tuning in this morning.
Awesome, brother. All right, guys, so that's going to do it. Hopefully all of you had an awesome week of trading. We will see you back here on Monday morning at 8:30 a.m. Eastern Time. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com to try the Discord for free for 7 days, or you can scan the QR code that's right up there. Have an awesome trading day, everybody. Have an awesome weekend, and we'll see you back here next week. Have a good one, everybody.
Take care, everybody.